Morning, everybody. Welcome back to the Collections Technology Think Tank 3.1. For those who've just joined us, you missed a really good discussion just now on people, collections risk, and talk about people and technology. Really, really great conversation. There was a couple of questions quite a number of questions we didn't manage to cover off in that session. So visit the Credit Connect website next Thursday, and we'll hopefully get some good answers from the panel on that. Moving on though, it's a big day for household finances announcements today, so we'll keep you informed of anything that goes on across the day. But this next session, we're going to talk and look at customer engagement strategies. The session sponsored by First Source, but a key thing about this session, as we always highlight, is have a look at the panel in front of you in terms of the interactive platform that you've got. Have a look at the information on our speakers. You can download information from our various partners and Credit Connect information on there. So have a look at that as well. But we really want to get you involved today. So if you want to get involved in socials, LinkedIn and Twitter is our main channels. Use the hashtag CollectionsTechTT. We'd love to see any feed from you in that. Let us know your feedback on the event. In this session, we'll run a number of polls as well. So it'd be great to they won't be intrusive of the conversation, but it'd be great to get your feedback on that. Again, we'll share those results at a later date in our review. And then more importantly, we want you to get involved with questions. We love getting questions coming in from you. So please use the little tab there that's got questions on it. And as I mentioned, we'll try and cover off as many of those as we can and put them to our panel. But it's usually quite a interactive debate within the panelists, let alone outsiders. So we'll do our best to involve everybody in that. But let's move on and let's get into the nitty gritty of talking about customer engagement. I'll hand you back to our event chair, Vanessa Northam from StepChange, and she'll introduce the next panel session. Vanessa, over to you.
Thanks very much, Colin, and welcome to those that are joining you as for our first session. We will endeavour to hold your attention as the announcement comes out from Ofgem and likely BEIS in terms of the price cap increase. I'm delighted we have an energy sector expert on here, so don't watch Sky, don't watch BBC News. We've got one of the best leading insights, and he's going to give us his view on the breaking news. But all joking aside, we know that there is a likely cost of living crisis coming, and for those consumers who have already been impacted by the pandemic, they're just about managing and the highly financially vulnerable. So for those of you that are in the first section, we ended on a really good segue into this section, which is all about customer engagement. We heard in the first panel about the fact that collections is changing. It's about resolution. It's about customer engagement. And I think what we'll do in this session is really build on that debate that we started previously. So I'd like to ask our panel now to introduce themselves, where they're from, and an insight or a learning that they've had over the last 2 years. And I'm going to start with David Murphy from ReachOut.
Oh, thanks, Vanessa. Hi, everyone. I'm David. Great to be here today and looking forward to the discussion. As a bit of background on me, 25 years in the credit and debt industry, 10 years promoting the use of credit for the largest retail finance company, another 10 dealing with the consequences of debt at a large DCA, 5 with Sigma Connected. For those that don't know Sigma, a leading outsourced contact center business, around 3,000 people in the UK, South Africa, recently launched in Australia, managing white label collections, customer services, all front office activities, really, doubled in size every year or so, and recently launched some new businesses. McLaren Credit Services is our new DCA. That's leveraging our offshore collections capabilities. And then there's our Reach Out service, the part that I work for. And I guess some might call it an entirely new engagement channel. So it kind of sits well with today's theme. Through our Reach Out service, we're working alongside creditors to help engage with their hard to reach customers in debt. We have really great conversations, open conversations, guide customers to support from charities to deal with financial, mental and physical crisis. It's that holistic support for the underlying reasons why they might be struggling. And ultimately, we're guiding customers back to our clients' own teams so they can support their customers who are experiencing problem debt. And this it resonates quite a lot with the first session and what was being talked about. It's really about tackling the problem of low engagement with those in debt and low awareness of the support that's available. It's about recognizing the link between debt and poor mental health, how life events are a complicating factor, and really turning the traditional approach upside down. So we looked really hard at ways to remove barriers to engagement. We looked hard at the value we offer those that are struggling, and through a radically different approach, we've created this safe environment, and it enables us to engage with around 20% of customers in 2 weeks. These are the people that haven't engaged with our clients for months. So it's fantastic that we're helping these people achieve better outcomes, and all of that's really great for our clients too. And I guess that leads me really nicely into the observations over the last couple of years. And it feels to me like we've been on this journey over the last 10 years, perhaps. The formation of the FCA, we've had this enhanced regulation, we've now got consumer duty, and all of this has been about raising the bar for how we treat customers and doing the right thing. And I guess my observation for the last year or so is that the focus on the customer has been stepped up again on truly doing what's right. And it just feels like we've come along leaps and bounds. I think we're all recognizing there's more people struggling. And I'm seeing companies that genuinely want to take steps to improve the support and how they engage with customers, not because they have to or because it's good for their business, but I'm seeing it because it just feels like the right thing to do. It's a real change in terms of the culture amongst many of the companies that are out there. And I speak with some amazing companies that are trying really hard to engage with and support their customers in positive ways. You know, they're working on stuff like tone and empathy, on listening, showing respect to customers, really important stuff around signposting, improving the support they offer their own customers, and working with partners. And it just feels like there's a real step change in priority and focus within many businesses, led in most cases by the exec. And it's just so amazing and refreshing to see over the last year or so. And I guess that's why our Reach Out services is resonating really well with some of those clients. And we're working with about a dozen of the leading financial service and utility businesses out there. So those are my thoughts, Vanessa. Thanks.
Never give the salesperson on the panel because that was 2 minutes, David Murphy.
Was it 2 minutes? Was it 2 minutes?
We've got 10 seconds now for the rest of our introduction. So, David, thank you very much, and we know each other well, so I'm sure you don't take offence at my flip side. Let's talk about utilities, because you mentioned there very much FCA. Ian, come and introduce yourself as brief as you can, but give us a pearl of wisdom as well.
Yeah, absolutely. So, morning, everybody. I'm Ian Parry, chairperson for Hope Energy. I've been in the energy industry for the past, getting on to sort of 28 years now. So I've seen the energy industry go through competition. I've seen the energy industry expand, and obviously looking at prices and the sort of gas crisis that we're going through at the moment. So I've seen many things across the industry. As far as observations over the last 2 years, what I've really enjoyed seeing across the industry is how we've started treating our people. And even though as an industry we've struggled and we've lost a lot of good companies, the industry's really pulled together. And you've noticed that sort of thing across LinkedIn, and people really starting to look after each other and care for each other. So in the individual companies, there's a lot of activity going on to look after people, mental health, diversity and inclusion, all those sorts of really good conversations around working from home, hybrid working. But that cuts right across the industry as well, where people are really looking to help people out going through difficult processes of administration and redundancy. That's me.
Thanks, Ian. Spot on with your timing. It's going to be interesting, the cost of energy increasing, how that will impact hybrid working, because are we going to see a seasonality to home working when people really are going to struggle to put their heating on in the winter? Thanks, Ian. Right, so we move a sector again, and happy to introduce James from the Cabinet Office. James, over to you.
Thanks, Vanessa. Hello, everyone. I'm not Steve Coppard, so apologies to people who are expecting Steve. I do work in the same part of government as Steve, though. 26 years actually in government. Previously at DWP, but now at Cabinet Office since 2018. Spent quite a lot of time working in London, but now based in the Northwest in an office at some point, hopefully. So I work for the Functional Centre for the Government Debt Management function. And you're probably thinking, what is that? Well, there's a number of functions within government. They're just groupings, common areas of work that cut right across, embedded in departments and arm's length bodies, things like HR, security, finance, and debt as well, debt management more specifically. And we do things like set strategies, assure standards, develop capability, give advice. My role is actually head of debt strategy. So practically that means kind of coordinating activities to improve consistency, improve practices, working right across government to make sure they meet expected standards, and facilitating a lot of user groups actually in user forums to address the challenges that we all face. One of the things that you'll notice that hopefully, and a reflection of the last 2 years, is we talk a lot about resolution now as opposed to collection or recovery. And our aim, and again, you'll hear us say this a lot, is to get people out of debt and not debt out of people. And our vision ultimately for our function is to achieve fair debt outcomes for all. And that means customers, creditors, and taxpayers as well, right across the country. Thank you.
Thanks, James. I love that line, and I've heard Steve use it. But that should be if we were ever all in offices again, that could be a mission for every single customer resolution centre in the country. Thanks, James, and by no means least, Steve. Let's hear from you.
Yeah, thank you, Vanessa. Good morning, everybody. Name's Steve Exton. I'm the AVP for Business Development at First Source Solutions. For those of you that aren't familiar with the brand, First Source is a global BPO organisation. We've got just under 30,000 FTE across the UK, USA, India and Philippines. And we currently have a combined turnover of around £600 million per annum. In the UK, we actually employ currently 6,000 FTE, which makes us one of the largest BPO suppliers of onshore FTE in the UK. But maybe more relevant for today's debate is 4 years ago, First Source worked very closely with a major US credit card issuer to develop a full digital collection solution with a primary objective to improve customer engagement rates. And they were doing that they wanted us to do it by communicating in a medium and a style that resonated with today's consumers. Today, please say 4 years on, these improvements have been realised, and combining human touch with intelligent automation, such as artificial intelligence, machine learning, and analytics to build an empathetic and extremely efficient collections process. We've been able to improve compliance, customer satisfaction, and of course, collections and recoveries. Now the model's been proven out in North America. First Source have asked myself and my colleague Mike Locke, who no doubt a number of you will know on the call today, to bring this sort of unique approach to the UK market. You mentioned, Vanessa, about observations. A couple of observations. I suppose what's brought this about is I'm sure we've all seen it, the sort of change in way consumers want to communicate, mainly driven by sort of Gen Zs and millennials, as they make up a larger percentage of the adult population. I think it's proven. There was a stat I was reading the other day that 75% of millennials will avoid taking a phone call as it's too time consuming. So they very much buy into the digital approach. The other stat that resonated with me was some survey done last year by Hire, looked at 150 billion calls globally in 2020, and only 6% of unknown numbers actually got answered by the recipient. And again, this is where digital comes into play, because it allows the consumer to view the communication and interact accordingly.
Great. That's a startling figure, and I'm sure we're all nodding, because do we answer those calls that we don't recognise? So thank you for that. I think everybody watching will agree we've got an absolutely awesome panel. I think my job here is to just keep an eye on the time, because I think the conversation is going to flow. So you're absolutely right, Steve. This is about a digital conversation. So let's start with quite a broad brush question. Is digital engagement realising its full potential across multiple sectors? James, I'm going to start with you, actually. From a government debt perspective, what's your digital engagement looking? Is it in its infancy? Where are you at with it?
I think it's very mixed. So one of the things I should state up front is I can't comment on behalf of departments, but I can comment on my kind of view across government and my personal views as well. It's mixed, I think it's fair to say. We could definitely make better use of engagement, especially through digital channels right across government. So one of the things we're thinking about is, if someone contacts one part of government, say HMRC, can we make use of that contact if they owe debt to other parts of government? We can definitely do more there. I see, again, looking across government, a mix of digital channels available. Some departments offer very little. Others, like HMRC, can stand up capability quite quickly. So I think our job in Cabinet Office is to bring everyone up to HMRC's level and enhance that capability across the rest of government. So as a consumer or a customer, you should have that same expectation no matter which part of government you touch on.
That consistency is the challenge, right? Because
absolutely,
they're interacting in very many different ways. Ian, keeping one eye on the announcements, it's not there yet. From your perspective, what does digital engagement look like in the utility sector?
Yeah, I think I guess the way I would look at it is digital engagement for most businesses starts with how they keep their costs low. So most people have kind of seen digital engagement as a way of managing their cost to serve, rather than necessarily thinking, how do we build these journeys? How do we build and use these pieces of technology to help customers engage with us? And I think the ones that are looking at it from the second option are getting better results. Everybody across the utilities industry is trying some form of digital offering. I think what we are seeing, though, is there's still a significant number of people that want to call, and there's still a small minority of people that would like a visit, particularly the vulnerable. And for me, I think it's balancing the lower cost digital services and using the savings you make on those to potentially offer some traditional services that to people that just cannot access digital technology.
I would agree with what Ian said.
Sorry, we just got the price cap announcement. It's going up by £693. Ian, breaking news. I feel like I'm on trial for Sky here. Initial thoughts, it was pretty much predicted.
Yeah, I mean, it's one of those things, isn't it, that we knew what to expect. It's a big number, and we've already lost a lot in the industry. A lot of companies in the industry already in a way to protect consumers. I suppose my view is now, how many of those consumers are going to be protected because there's less competition within the marketplace? So I'd be really interested to see what comes behind the price rise, how government are looking to help consumers. We've heard about council tax reductions. We've heard about warm home discount expanding, and how do we look after it? I know that there's a lot of work going on in the industry at the moment to see how people can proactively contact customers and offer things rather than just kind of give this sort of give services out. So yeah, that's a big what we were expecting. Let's see what the government are going to do to help now.
Yeah, well, Rishi Sunak's not due until 11:30, so we can pick the conversation back up. But yeah, let's just all digest that. A £700 increase onto the price cap. So we think about people who come to step change. Their resilience to absorb something like that. I mean, we know that food banks are being pushed to the absolute limit. This is we await Rishi's announcement. Steve, sorry, I had to cut you off there. So if you can recall what you were going to say, we'll pick the conversation back up.
Yeah, I can. I think Ian made a really fantastic point, but I just wanted to elaborate slightly because, yes, some people employ digital as a way to reduce cost to serve. And yeah, we see up to 75% reduction in cost to serve, which is huge. But for myself, whether it's a customer who's financially vulnerable or needs to communicate or discuss their account, there's also the convenience side. Funnily enough, yesterday I needed to speak to one of my creditors, and I called them. Their portal wasn't overly intuitive. They do have a portal. And so I called them. I waited 45 minutes. Call centres have never been busier, partly caused by obviously the difficulty in terms of recruiting as well. So in terms of having resources, it's difficult. And so one of the beauties of having the digital side is the ability to not just deal with a customer on the channel of their choice, but also to meet them at a time and place of their choosing. So we see, I was looking at some stats the other day, we actually see a spike, weird as it may seem, at 4 o'clock, between 4 and 5 in the morning, people are actually self-serving. We actually see a higher spike there than many other hours in the day. I don't understand the reason fully behind it. And of course, if they want to call the call centre, well, they won't even have a 45-minute wait at that point because the call centre won't be open. So digital self-serve will allow the customer to deal with it at a time and place of their choosing. Is probably for me more important than the reduction in cost to serve.
And potentially freeing up those phone lines for the people who can't access digital services.
Absolutely.
Yeah, I think choice. I think choice is the key word here. So from a sort of building on that point, contact centres, the ability to be able to help those from a digital blend, who's getting it right, who's getting it right out there, which sectors are really leading the way, where you've got that channel choice, but actually the way that you want to engage. We know collections has quite a lot of binary aspects. We talked about that in the previous call, but financial vulnerability in complex situations, how is that engagement manifested online versus telephony? David, coming to you there with a sort of maybe a counter view.
Yeah, absolutely. And I guess just building also on what has been said, it certainly feels like it needs to be about the customer choice. And I do worry that sometimes there is a bit of a conflict when we look at digital and self-serve around what's in the customer's interest or preference and what the company's trying to do in terms of driving the cost down. But I do accept that, especially as the amount of customers who do need help starts to increase, we do need to maybe nudge more customers down the digital route. We do need to have a broader range of options that make sure that they can engage. And where we are doing that, I think it's essential that we still try and maintain a degree of empathy, which is perhaps a really difficult thing during a digital journey. And I guess it's interesting if we kind of have a little look at actually what empathy is. And the Lending Standards Board have a really kind of interesting definition. They did a great podcast, actually, if anybody wants to have a look. It's called Lunch and Learning, I think. But they define empathy as to be understanding about, aware of, and sensitive to somebody's situation, thoughts, and feelings. And that really kind of captures what we're trying to achieve here. So for me, getting empathy as part of a good journey through a digital process has to be about still having some degree of human interaction, and it not all just being down to kind of AI and chatbots, because I still think empathy is something that exists between kind of one human and another to a large extent. So we can certainly have some great kind of digital interactions with customers, but I think we need to be mindful of, when they are telling us stuff, that we are recognizing the challenges that they're talking about, we're responding to them appropriately, and we're delivering a great service through those digital channels. Vanessa, I've forgotten what the question was, but I'm not. Did I answer it?
I think I've forgotten the question as well, but yes, of course you did, David. Sorry, I'm getting incoming questions about the price rise, which I'm trying desperately not to be distracted by. Who wants to build on what David's just said?
I wouldn't mind jumping in if you don't mind. I suppose for me, it's where do people start with digital? And do they kind of say, well, we're going to offer everything because that's what people want, rather than focusing on what they can deliver really well from the beginning? So, whether you sort of say, well, we're going to give people, Facebook Messenger, we're going to engage with people on Instagram, we're going to give people email, we're going to give people web chat. So where do you start? And certainly my recommendation would be, start with something that you can manage really well. Equally, I don't think you can underestimate the value of an online community, and I've seen it work really well. Places like Pure Planet in the energy industry, giffgaff were founded from the sort of the foundations of an online community, and everything that they are is the online community. And that for me is where the human empathy side of things comes in a digital experience, where at 4 o'clock in the morning, you can go to the online community and there's already an answer ready and waiting for you, or there's somebody else ready and waiting for with an answer. So for me, I think it's start with sort of the smallest amount that you can manage really well from a digital point of view in your digital strategy, and also engage with your customers through an online community. And the value of an online community, I think, and particularly in collections, where we've all seen the online communities to help people avoid paying. And there's lots of forums where you can kind of see, avoid this debt collection agency. Here's some bad practices in place. Here's a standard letter that you can use to get these people off your back. Well, I think there's a sort of a contra argument to that, where there's a more of a positive conversation to be had around how you can engage with people, which companies are the best to engage with, how you can sort of resolve the situation rather than how you can avoid it.
Ian, that's a really great point about the online community, and Pure Planet was a fantastic example of that. When we're talking about trying to reduce costs, get customers through digital journeys, but to be able to employ your own customers to do the job of customer service in many regards and make them your brand ambassadors is fantastic. And I guess the key to that is having a product or a service, or being a brand that people really feel passionate about. And I think that's a big challenge for a lot of companies. So the question is, how do you create a brand that people are passionate enough about that they will do that for you? They'll go on those forums, they'll be part of the discussion and help the other customers.
Yeah.
So is that I'm coming to James now. How about brand when it comes to your part of the sector? How and I do not have my tongue firmly in my cheek, but in all genuineness, how does a government engage in an online way to actually because that's a whole different landscape, is it not?
It really is, and I think one of the big challenges we've got is a lot of the scams that are floating around, and the scam emails, particularly HMRC. Typically, people don't react. If it is a genuine email, they'll or genuine sort of digital contact, they'll tend to default to what they trust and understand. Which is, and I know we've talked a lot about kind of telephone as the digital alternative here, but for us, there's a big kind of area that we need to focus on, that's sort of face-to-face and reconnection visits. So one of our big worries is sort of digital exclusion. The more we push services online, the more people we exclude. I think there's something like 5 million adults in the UK who've got really real choice of data or dinner. We recognise that. So trying to sort of maximise that, use our contacts within, maybe it's local authorities who've got that face-to-face engagement, but making sure that we're reaching out, because often it's the people who aren't engaging, the most vulnerable, who actually need the most help. So recognising that gap and somehow working together across the sector to try and sort of address that is one of the big challenges that we see.
Mm-hmm.
And that highlights that actually your mobile phone and your data is the new priority. And yet when it comes to looking at the old income and expenditure, that currently isn't. And is that something that it comes into the spending, but it's not that upfront protection, mortgage, council tax, etc. I mean, we talk about heating or eating, but data or dinner. I mean, you have to apply for universal credit, do you not, online? That how does that work from a if you can't charge your phone, where are you?
It's your lifeline, really, isn't it? And it's interesting because it's not a priority bill, and then we look at the energy prices increasing, and it's not just an issue for the energy companies. It's going to be anybody who is trying to bill for a service. But I'm pretty sure that a lot of customers will maintain their mobile phone bills. They'll make sure that they're paying those because it is their lifeline. And then perhaps there's sectors like the water sector, where you can't disconnect a customer, and are they going to feel the biggest brunt of the increase in price? Because when customers are making decisions around what bills they do pay and what bills they don't pay, I often think that the water sector is a bit of a canary in the mine. It's, you know, it can be the first one that they do stop paying, and the mobile phone bill is, you know, the last one. So actually it's a very different conversation with a customer where you are referred a debt and it's a water debt compared to a debt which is a mobile phone debt, perhaps.
Absolutely, and we've had some recent engagement actually from the mobile telephony sector as a result of the pandemic, because yes, it's about making sure the data's there, but actually the cost of handsets. So, you know, affordability of those handsets, you know, you're in employment, you sign up to a brand new iPhone deal, and then all of a sudden you need to be on almost like a social tariff for your data, but you cannot afford that handset. So we were talking earlier about making sure that whatever your digital engagement, it works on the oldest handset as well as the most recent one. So just sort of thinking, just building on that actually, about the multi-sector and the, you know, the differing experiences that are happening for consumers. How can we turn on consumers to the earlier engagement? Has the pandemic helped with that? Have perceptions changed? Has digital got a role to play in that?
Yeah, I definitely think it has. There was a report I read that in 8 weeks at the beginning of the pandemic, the move to digital was what they had expected over the following 5 years. That's how much it had progressed. And you know, quite what was behind that, I don't know. There's probably some obvious reasons for that, but yeah, there was a huge shift. You know, obviously, people not going out as much as they were, not dealing face to face is probably part of it as well. And so yeah, a lot of people moved to digital channels.
Okay, right. We've got a question. This is taking us very much away from today's issue. SDRP, as a statutory debt repayment plan. We've had a question, something that is coming increasingly close to my heart. So, looking ahead, what do panel members envisage the potential impact of SDRP will be on lender level engagement with their borrowers? Let you think about that. Is everybody aware of SDRP?
Statutory debt repayment plan we're talking about, aren't we?
That's what we're talking about, James. Yeah. Anybody, any thoughts? Is it too early? Is it? I mean, it's a way off, but the regulations, we are expecting the first draft of the regulations in I think towards the end of this month, beginning of next. No? Okay. So sorry, questioner. We're not in the detail of that yet. I mean, from sorry, James.
I mean, I was just going to say this is obviously it's a Treasury policy, and I don't think I can comment on that at the moment, unfortunately.
Okay. Thanks for that. We'll move on from SDRP. Are there any other questions? Is there any? I mean, I'll come to the panel. You know, lender engagement. Who's really nailing it? We talked about some of the online communities, but true engagement, where that person is maintaining that dialogue. What are you seeing in your sectors? Who's really nailing it?
I think there's some really good examples of organizations out there. And when we talk about engagement, for me, it feels like the customers that are most engaged are the ones that have had the best experience with the company that they're dealing with, and therefore they're more likely to engage again and again. And that comes down to how they're treated when they do engage. It's that crucial point when somebody has a conversation with their lender and says, you know what, I'm struggling. And they're a bit worried about how that conversation might go. If they disclose something, will it limit their ability to get services in future? How is their lender going to respond to that revelation? But where creditors are responding in a really positive way and supporting those customers, recognizing the challenge and trying to help them out, I think that builds trust. And companies like Nationwide Building Society, Anglian Water, you know, I speak to these guys and I hear that they're doing some amazing things to help build trust with their customers, which hopefully then leads to engagement future down the line. So when people are struggling again in future, they're more likely to come back and have the conversation rather than be worried about what happens. It's, you know, it's the difference between a good experience means better engagement next time something bad goes wrong, and a bad experience means, well, why should I bother phoning up, you know, tell my lender, because they're not going to do anything about it, and actually it might just make my situation worse. Yeah, there's some really shining examples, and I think you get all of those pockets in different sectors. But it's interesting to see that everybody seems to be up in their game. So actually what used to be the average maybe 5 or 10 years ago, it's actually a much higher bar, but you've still got those that are sticking their head above and going beyond what everybody else is doing.
Yeah, and I would add on. I'd agree with everything that David said, and I'd also go back to a point that Ian made earlier, which I thought was right as well. In that, what I'm seeing is a number of companies that starting to employ digital. They're starting off reasonably small, which is probably the right way to do it, using it on a limited basis, and that allows them to actually use the technology that they're using and do it extremely well. However, part of the overall equation is the omni-channel piece, because we need to get to a point where we're using all the different channels, because of course it's about providing this, it's how the customer perceives it. So it's good to start off small and make sure that as a creditor that you're using the technology well and to its full capability. But if you're only using it in a limited way, that's not going to match the expectations of all the customers. So it's about having all the different channels. It's about getting as soon as you can to a point where you're using all the channels so that you're covering all the preferences of your customer base. And then I think you've kind of got to, that's utopia.
So any which way that they choose, whether, to your point, whether it's Facebook Messenger, Instagram, I'm sure we're all big grammars on this.
Yeah, and dare I say, obviously I'm talking a fair bit about digital there. Dare I say, this all needs to be underpinned by the human touch. At every point along the way, there has to be the ability to go, I want to speak to somebody.
And at Step Change, we've got the full omni-channel journey, you know, which wherever you choose to start, whether it's telephony, move on to online, start online, etc. And we've seen that engagement and that in actual debt advice, you know, go significantly as a result. We have a question. Does digital debt, next one. How do you truly engage someone with debt digitally? I understand you make it easier for them to get in touch. How do you make it easier for them to pay?
Can I jump in on that one? I think for me, we're talking about digital as if it's something separate from what you are as a business. So I think to start with, you know, what sort of brand are you? How do you build up trust with your consumers at the moment? How do you talk to people before you're developing your technology? Because the digital side of things is just a piece of technology you're plugging in. So let's start with, how do we already engage people? How do we talk to people? How do we build up trust? And then it's, okay, now we're doing this digital thing. We're carrying on our story, and maybe we're experimenting with different options, but customers still trust us in the same way, hopefully. Maybe, you know, to James's point, they might think, hang on, they've never done this before. So I'm not expecting an email from them. So I think you've got to kind of start with traditional approaches to tell them, you know, hey, Vanessa, we're just about to start a digital journey with you. So don't be surprised if you get an email from us. Don't be surprised if you get a text or a WhatsApp from us. It's all okay. And here's how we're making you and your data safe. So just starting at that point, I think, because you can send somebody a payment link to say, here's a nice funky way of paying. But if I get that text message, I'm not expecting it, I don't recognize it, I don't trust it, I'm not going to engage with it. So I think you can do all the funky stuff, and that's wonderful. But if you don't start with the basics of convincing people that this is all good and it's safe, then they're not going to engage.
Yeah, we a good way to do it is pixel fires embedded within communications, so that you get the customer insight. So that enables you to see what they've looked at, how far down a communication they've read, what links they've clicked on, and then when they actually go to a portal, every step along the way, including the point at which they drop off. And part of this as well is about making communications personalized, a move away from the traditional collections model, so that it needs to be empathetic in its nature. There has to be sentiment. So using machine learning, you can actually measure the customer interaction by using machine learning and the levels of sentiment embedded within the communications. And then when you get to that level, you actually are really, really delivering a top class service, but more importantly, you're getting the engagement rates, which is totally measurable through the pixels. You're getting the customer engagement rates that you're looking for.
And I guess we need to. Sorry, go on, Vanessa.
Go on, David.
I was going to say we need to bear in mind there are different types of digital here as well. So it's not just about an automated response, an AI that's powering a digital interaction. It's about two-way SMS, it's about web chat, and it's about humans interacting in a digital fashion with other humans. And, there's some interesting stats around half of those that have problem debt, also have mental capacity issues. And actually, in lots of instances, they don't want to engage in the first instance through a voice conversation. So actually having a digital engagement that's manned by somebody that's able to have an empathetic conversation. And this is, I think, to Ian's point, where we start to think about the culture of a business, because if you've got a really strong culture within the business, which is about supporting the customer, then that should shine through in your voice conversations, in your digital interactions, because everything's being built from that foundation upwards. And then if you can employ the right kind of people to man your two-way SMS, your web chats, and so on, and they understand the way to communicate and reflect the style of the person that they're speaking to. We've got clients who allow us to use emojis so that we can express some kind of, sentiment behind the message that we're sending. But at least that way we can then start to have a similar conversation, and we can guide the customer through, understand exactly what it is that's underpinning their difficulty to pay, signpost them in the same way we would a voice conversation, and you get a similar outcome. So it's not just about an automated digital journey, it's about a human digital journey as well.
Enriching that journey. I'd love to see the list of approved emojis and what they do. We're coming to the end of this session. We have got a further question. Oh gosh, there's loads of questions now. I knew this would happen. We'll just end on this one. So does digital debt collection make it harder rather than easier to employ talent in call centres? I get that digital can free them up to support customers who need it most, but are people also scared it will replace them? Just, we've literally got 2 or 3 minutes. Is digital the enemy of a great contact centre?
No, I don't think so. Sorry, James, go on.
I was going to say, I think for government, it's always going to be that blend. And, David made a great point there about there's a point in the digital journey where you'd want to pull people out and push them down a more traditional channel. We've spent a lot of time developing a vulnerability toolkit that's all built around either face-to-face or voice interaction, and having those rich conversations. There's always going to be a place for that, in my view. Sorry, Ian.
Yeah, no worries. I was going to say something very similar. Other than I don't think it's the enemy, and I think there'll always be roles in a contact center environment for talented individuals. So whether they are speaking with customers or improving the journey for customers through continuous improvement, or looking at the way in which we communicate with people, I think there'll always be a role for that talent. And I think it's better now if you're offering hybrid working or working from home working, so they can work whenever they want, wherever they want. So the chances if you get in that talent shoots through the roof, I think.
Okay, we've got another couple of questions. I'm going to try and shoehorn these in. So I understand engagement is required, but with limited time and competing priorities, I think there needs to be a clear what's in it for me when I engage a company. So when I engage a company is important, and regular engagement can be draining. So my question is, how do you segment, develop personas to identify what people's preferences are And more importantly, how do they change? Are we broaching sort of digital overload? Are we sort of trying to engage? It's like, I've set my payment plan, leave me alone now. I thought this would be the end of it.
That's a great question. That's a top question. And it's a really interesting one as well. So I guess the short answer is we ask our customer what their preference is, and then we try and engage with them in that way and at the frequency they want and on the topics that they're interested in. Because as a consumer as well, I know that when I open my inbox, I'm spammed by 50 different emails every day, and I don't even read them anymore. I'm swiping. And unless it's something that's relevant and interesting, and you almost get a little bit kind of jaded to the interaction, unless it is interaction that's important and timely. So I think, you've got a question, am I pushing out a communication to a customer because I want to, and it's important to me as a business, or because it's important to them as a customer and it's what they want to hear?
Yeah. I would just add, the best energy companies I've ever been a customer of are those I've never had to speak to. So don't bother me. I won't need to bother you. Do what you need to do, and it's nice and simple. Don't engage me. Don't force me to engage with you about a topic that is interesting to you, but is maybe not interesting to me.
Unless I've got a problem and I need you.
Yeah, and then make it super easy and fix it super quickly.
Absolutely. Yeah. I've spoken to my energy company once, and I was expecting a computer says no. And they blew me away. Their advisors knew exactly, they could pinpoint. And it was a complex query that, every frequently asked question on the website couldn't answer. So, yeah, absolutely be there when I need you. So we've got some, I think it's time now for just some very quick closing remarks. Mr. Sunak is probably at the dispatch box as we speak. So we will bring that to a close. We'll see what the government support is likely to be for that energy price rise. It's a challenging one to fix, because these energy prices are likely to continue for some time. So I'd just like to thank our panel. Really appreciate those insights. James, thank you for stepping in at short notice. And I will hand back now to Colin.
Thanks, everybody. Thanks, Vanessa. That was really good. I'd like to echo Vanessa's thanks for everybody in that session. It was fantastic. Really good to hear those views and get interactive with the live news that we had as well. Really good. Yeah, I think that's going to ripple for a while, that effect of that news. So, yeah, all good. Yeah, that's it for this session. We're now going to have a little bit of a break until 11:55, a bit of a big break, actually. And then our next session, we'll look at vulnerable customers and affordability. And we've got a great panel lined up for that one. So let me end by thanking everybody for their time and effort today. And I hope to see you all at either next session or a future event. Brilliant. Thanks for your time. Cheers, everybody. Bye.
Thank you.
Thank you.